Yes, investment comes with its risk, but savings is just putting your resources somewhere.
Fear of missing out.
This investment, this
Yes.
you get 70% return.
Exactly.
So most beginners
That's
don't do
very
their
correct.
research.
Do you think professional advice is important at the beginner stage?
Professional can tell you, oh, there's a commercial paper coming out. Your bank will not tell you if a commercial paper is available.
What is the difference between investing and saving? Hello and welcome to Wall Street Journal, where money meets real life. My name is Shadrack Sawa. I'm your host, and with me I have two amazing guests. Welcome, ladies. Such an honor to have you here. In today's episode, we'll be unpacking policies, trends, and opportunities that matter to both you, your business, and your financial future. On this episode, I have with me two ladies, like I said. Would you please introduce yourself, starting with the lady with brown?
Okay, thank you very much, Shadrack. My name is Tolu Babatunde. Thanks for having me.
Nice to have you.
I am Oluwasola, Asiwaju.
Very welcome,
It's a pleasure to be
Oluwasola.
here.
Thank you so much for coming. So we'll just get right into it. Today's topic is something very, very important. It's of interest to everybody who's living in Nigeria of today. You know, as you may know, inflation has crept in, standards of living, disposable incomes are steady on the reduce. And, you know, the question about investing always comes to mind as young people. How do I invest? How do I edge against inflation? What do I do to put myself above, present, economic realities? So a couple of questions, starting with Tolu. What really is investing? What does it really mean to the beginner?
Okay, investing really means to the beginner is actually watching your money work for you, watching your money grow. The most beginners, the assumption they have is the more salary I earn, the more my money grows. But investing is actually watching you sleeping off and you sleeping and actually seeing your money grow. So
Right.
it's not about you earning more salary.
Right.
You can earn more salary, and if you're not investing, then your money is not growing.
That's right.
You're just leaving it in a bank account.
That's right.
But actually making intentional steps and saying, okay, I'm investing this money in this asset or in this investment product, then that way you're actually watching your money grow over time. So that's what investing is.
Absolutely, absolutely. And so, Shola, what does it mean what is the difference between investing and saving? Because a lot of people really don't know the difference between what investing is and what savings is. So would you like to let us, know?
Okay, so in addition to what Tolu has said, to literally put it, investment is like committing your asset committing your fund, your money, your asset into an investment, your resources into an asset, in expectation for an income or growth in the future. Yes, investment comes with its risk, but savings is just putting your resources somewhere, putting it not in an expectation of growth or an income on that asset. So the major difference, if we simply want to put it, is like savings, just accumulating your funds somewhere without an expectation of growth or increase in that fund. While investment is an intentional way of putting your resources into an asset in expectation that over time you will generate income on it or the capital will grow. So that's just a major difference.
That's beautiful. Apt. But what does it mean to invest in stocks and then bonds? A lot of people are now taking keen interest in this stock thing and bond thing because, of course, this year has been quite a good year for the stock market in Nigeria and all of that. So a lot of people, young people particularly, are asking, how do I get into this stock thing to get, some value out of it? Do you want to help us with that, Tolu?
Okay, yeah, I'll simplify it for everybody.
Okay.
When you buy stocks, it's like you're owning a company, you're owning shares in that company that you buy stocks. And if the company becomes profitable over time, you definitely earn good returns or dividends.
That's right.
Meanwhile, for a bond, you're actually lending to the government or a company, and they pay you back the money you lent with interest. So simply put is, stocks is you owning company, while bonds is you lending. That's just it. So you're doing the two. I'm owning and I'm at the same time I'm lending. I'm owning and getting income, and I'm lending and also earning income. That's just the difference.
Interesting. So it's a two-way thing. That's right. What about Shola?
Yes, in addition to what she has said. So when you buy shares, so it's interchangeably used. It's either shares or stock.
Right.
It still means the same thing.
Right.
So it's just a part ownership of a public listed company.
Right.
So if I buy share as a beginner investing, you are just saying I'm taking part ownership of a business, of a company that is listed on Nigerian exchange or any other exchange whatsoever.
Right.
Why bond? Yes, like she rightly put, is like lending.
Right.
As an investor, you are lending to a government or a corporate.
Right.
And we have different kind of bonds. We have government bonds, we have corporate bonds. So that's just the major difference.
Thank you so much. Now, moving on from the stock market, there's also this very important aspect of savings and investment that a lot of young people are getting to know about these days, and that's the topic about mutual funds. Young people will say, but what is this mutual funds thing? I mean, what does it really mean? So can you explain it to the layman, for someone who's taking Investor 101? What does mutual funds actually mean? And how can someone take part in the mutual funds game?
Okay. The question is...
Yes, Tolu.
Okay, for mutual funds, I'll say mutual funds is a pool of funds.
Right.
It's people coming together, like the name implies, mutual. You are mutually coming together, and you're investing in a particular, maybe in share, it might be equities, that stocks, it might be money market instruments and all that, but you're not the one managing the fund.
Right.
Earlier on when you had asked about what is investing, if the person is buying shares, the previous questions, the person is the one being intentional and I'm buying shares in this company. For a mutual fund, it's professionally managed. You have a fund manager that manages that investment for you. And another thing about the mutual funds is that it also gives you the option of diversifying.
Right.
So it takes you off the cumbersome effect of saying that I want to buy shares in company A, I want to buy this bond, I want to buy this, I want to buy this, and I don't have the huge amount to actually invest in that. With a mutual fund, with just maybe depending on the mutual fund you're investing in, the money mutual fund you're investing in, some as low as 5,000, some as low as 10,000. You're actually investing in different asset classes. You're watching your money work for you, which is back to my first response to your first question.
That's
is investing, making sure that your money's working, because you're not the one professional, but you have a professional managing that fund for you.
That's right.
And also helps you in terms of diversification. You might also ask that, okay, that it's good, mutual funds, but what really explain to me, like for a beginner. So I'll give an example. Myself, Shola, and you, we want to go to, this is where in Ikoyi, right?
Yes,
this is Ikoyi. Yes. I want to get to Aja, for instance.
Right.
I and Shola decide to say, I'm not going to drive, I'm going to take a BRT bus to Aja. And you, Shadrack, decides that I'm going to drive to Aja. You driving to Aja, you are going to be responsible for fuel in your car. You're driving on the road, you ensure that there's fuel in the car, the radiator is working, the engine. Exactly. You're driving on the road, you're ensuring that you're watching out for pitfalls, gallops, you're not eating this person. Exactly. You can't sleep while you're driving. True. You can't even, maybe if you have a Kindle app, you can listen audio. Can listen audio, but you are the one actually doing everything till you get to Aja. Right. For me and Shola, we might decide to say, okay, we're going to take a BRT bus. We'll queue, we'll buy the ticket, and we sit down in the bus. We have the driver. The driver is like the fund manager. And of course, if I'm going to take the bus, it's not just going to be only me and Shola. We have different passengers in that bus. Exactly. And that's how a mutual fund works. Do you understand? Right. And that driver drives us to that destination. Do you understand what I'm saying? At the end of the day, we both arrived at a destination. That's true. While myself and Shola in the bus, we can do different things. We can eat, we can decide to read, we can even decide to take our phones and start capturing all the sites.
Even vlog.
View and all of that. Do a vlog. Do you understand? And that's how a mutual fund works. Right. You're actually investing in different assets, but there's a fund manager that is professionally managing it for you. And at the same time, you have time to do other things. You're not the one involved in the direct investment.
Thank you. Thank you. Now, the next question goes to Shola. How does one know, the right stock, to buy? What does an investor have to look out for when they want to play active part in the stock market?
Okay, it's very important an investor or a beginner understand or is able to identify 3 questions and be able to answer them. Yeah. What are my objectives? Investment objective. Is for maybe I want to acquire some fund for business in the future.
That's right.
I want to meet up with a project.
Right.
I want to fund the project. So investors should be able to understand this question and be able to answer it. So that will guide your decision in the kind of investment you want to make. Another thing is, what is the time horizon? Is it for a short period of time? Is it for a medium time? Is it for a long time? So that you know the kind of investment option you are putting your asset into.
Right.
So that will guide your decision too as a beginner. And the other question is also for what purpose? Yes. What are my objectives?
That's true.
Yes. What did I want to achieve? And those are very important questions an investor must ask yourself and be able to answer to know the kind of investment option you want to put your asset into.
Very apt. I like the way she put it. You have to know. Just like Socrates said, know thyself.
Yes.
So, Tolu, rather, what are some of the common mistakes that you've noticed over time that young investors or people who are just entering investment make? Some of the common mistakes that you've noticed over time that people make.
There are several common mistakes they make. First of all, that bandwagon thing, the hype.
Yes. Fear of
This
missing out.
This investment, this thing.
Yes.
You get 70% return.
Exactly.
So most beginners don't do
very
their
correct.
research. I always say we are in a digital age.
Yes.
Knowledge is not like the way it was 20 to 25 years ago.
That's right.
Knowledge is available for you.
Right.
With a smartphone, you can find out information about products or investment that you want to invest in.
That's right.
But the typical beginner might just follow the bandwagon. This person came and said there's 70% interest. There's 50%. Let me go and put my money there. They'll double your money for you. Do you understand? All these Ponzi schemes.
Yes,
another mistake a lot of beginners make is the fact that they don't do enough research. They don't carry out enough research. And that's where sometimes you need the help of a professional. And like I said earlier, the world is a digital world. You have a lot of tools where you can actually learn about investment.
Right.
It's so bad if you're the kind of beginner that says, okay, the only social media platform I'm on is Instagram. There are a lot of Instagram platforms pages that you can actually learn.
Right.
Most of these investment firms have their page on Instagram and they speak about investment. Then you also have individuals that are like wealth coaches that they tell you that, okay, the Nigerian economy is doing this, you can invest in, and they really simplify it. So it doesn't really look very complex for you. Another mistake beginners make is waiting until they have a lot of money before they start investing.
Yes.
I always use this word, start with what you have.
Yeah.
Do you understand? It's a book I read once with that Sam Adeyemi, start with what you have. You can start with as little as 5,000 and begin your investment journey. You don't have to wait till you have like 1 million or 10 million or 5 million or 1 million before you commence with. So those are just, like I'll say, the common mistakes a lot of beginners
That's right.
That's right. Journey.
Thank you so much, Tolu. So of course, and I'm very interested in what you said about people making the mistake of waiting till they have enough money, because you never can really have too much money, enough money really. So it's always important to start small, start with what you have, right? So that brings me to the next question. So say hypothetically someone has only 50,000 and he wants to try out this thing. Right? He doesn't want to miss out. He has done his research and he's seen some companies that are actually doing well, both, year to date or all time. And he's saying, okay, you know what? Let's put this 50,000 there. Where can they, realistically start from?
So sometimes it's not really about the amount,
right?
But it's about starting and consistency. Like just what you said, 50,000 naira is a huge amount to start.
True.
Take for example, look at the Sterling public offer that just ended.
Yes.
The minimum subscription was 1,000 at 1,000 units at 7 naira.
Yes.
So you can imagine that means you can start investment with even just 7,000.
That's true.
And you are a part ownership of the company listed on the exchange. So it is not about the money, it's about the consistency. Then it is very important with that person with that amount to diversify, and that is when the professional advice comes and where should I put this kind of fund, and is it for a short period of time? Your time horizon, it matters a lot. And as a beginner, you don't have to take a lot of risk.
That's true.
Yeah. Just look at your risk appetite, your level of risk you can take with that 50,000. That will guide you on the kind of investment you want to make. There are kind of investment options that are very risky, and if you look at yourself that I can't take that kind of a risk, then there is another kind of investment option that will guide you against that.
That's true.
So like I said again, those questions are very important. Your kind of risk level, your time horizon, and the help of a professional advice to guide you on where to put that kind of asset.
Aptly put. I mean, it is not about the amount, but then the consistency.
Exactly.
I like how you put it. And so, Tolu, finally, what role should professional advice play at the beginner stage? Do you think professional advice is important at the beginner stage, especially during information gathering, research, and all of that? What role do you think?
Yeah, professional advice is really important. Like she said, Shola said that when you asked the last question, you should seek professional. When you need it, especially when you're a beginner, it will actually aid and help you in your investment journey better. Give an example. I'll just give a scenario.
Okay.
You don't have a professional advisor, and you say that, okay, I have 1 million.
Right.
And you go and put all the 1 million in stocks, and your risk appetite is very low.
Low, yes.
And you see the way the stock market is volatile.
You panic.
You panic, or you say, okay, I'm going to use it for a real estate investment. Okay, don't even let me use one. Let me use a huge amount, 100 million. As a beginner, and say, okay, I need to buy a property at Agungi or somewhere around there, and in 3 months, 6 months time, I'll sell it and I'll make times to my money. In 6 months time, I'm not saying you won't see offers, you might see, but how liquid can that be if an emergency happens? But with a professional advice can tell you that, okay, this 100 million, you can diversify. Put maybe 30 million in shares, put 20 million in shares, put 40 million in mutual funds. Put 30 million in real estate, that same real estate, you can pay instrumentally. Do you understand? The returns from the money market fund, the mutual funds, or the stocks you can use, you can be using it to plow back and pay back the real estate you are looking at, and say, okay, speak to them. Is there an option where I can pay for a long term? Do you understand? So those are where professional advice is coming on. Secondly, another thing with professional advice is that there are a lot of offers that are in the market that it's not publicly available for everybody. But with a professional can tell you that, oh, there's a commercial paper coming out. On a normal day, if you go to your bank will not tell you if a commercial paper is available, unless maybe it's the bank that issues that commercial paper, that kind of thing. But a professional can tell you that, oh, there's this commercial paper, these are the yields, these are the returns, why don't you take advantage of it? It only has a short window open for maybe 24, 48 hours. You can cash with just 5 million. With even as a client of so and so investment firm, with just 1 million, you can actually invest in it. And you'll be like, wow, I didn't know about it. So that's why you need a professional to guide you. It's like you're saying you're going to the gym and you don't have a fitness trainer. Yeah. And you want to achieve this type of body in maybe 3 or 6 months. Right. You go to the gym, you just keep doing.
You just end up lifting anything.
And maybe you're not meant to lift weight. Maybe you're meant to do this kind of a particular kind of life exercises. And a fitness trainer comes to guide you. Do you understand? That's how the investment journey is.
Right. Thank you so much, Tolu. So, in your final words, Shola, what would you say to someone who's looking at entering the investment world in 2-3 minutes?
Dear beginner, dear investor, it is very important to start now. Yeah. Now is the right time.
Right.
And it's not even about how much you put in, how much is the asset. It's about the consistency, the resilience of, and the decisions you want to invest. So the consistency is very important. Make up your mind that at every point in time, it might be monthly, it might be weekly, you want to be investing a particular amount into your investment account, and over time you build your portfolio. And that is my advice for the viewer. Thank you.
Thank you so much, Shola. Tolu, about you?
Okay, well, just to buttress what Shola said, I'll say start with what you have, which is what I always say. It's just as you to have 5,000, 10,000, and you can begin your investment journey. And we are in a digital world. Information is key. Information is very important, and this information are readily available. For instance, tune into this podcast and watch different episodes that will definitely come up. Yes, and you definitely learn from that. So that's a starting point. Thank you very much.
Thank you so much, Tolu. And that's all for today's episode. I'd like to especially thank you for finding time to come and speak to us today, ladies. I really appreciate. And for you, if you have enjoyed thoroughly today's episode, make sure to like, subscribe, and share this video to your friends and family, and also hit the bell button so you get notified of our subsequent episodes. Thank you so much. If you enjoyed this episode, like I said, join us next time where we continue to bring money to real life. Thank you so much.
Thank you so much.
Have a good one.
Yeah, thanks for having us.